Welcome back to London. The Swedish and Norwegian currencies have been suggested as the new safe haven of choice since the Swissies 120 floor against the euro. And I've been speaking to Melinda Burgess from RBS about the qualities of the Swedish krona. When Switzerland put in place this 120 floor for the Swiss franc, there was lots of attention paid to the Norwegian and Swedish currencies, saying that they're the new safe havens of choice. Do you think that that analysis is justified?
I think they are to an extent still. They both have current account surpluses, they both have low amounts of public debt. So in that way I think they still are safe haven currencies. Also they are still AAA rated, which is important in an environment where we are seeing a diminishing pool of AAA rated countries. So in that way, yes, I think it could still be construed as a safe haven. But fundamentally, Sweden is looking like it has a weak outlook in terms of macro data. We have been seeing some softening in the data recently. Some latest consumer confidence numbers and manufacturing confidence numbers today came in lower than expected. Consumer confidence now in negative territory again. So really there are some headwinds coming up for the Swedish economy. And we do see some risk that we do see a full year contraction in Sweden, which raises the risk that we could see some more policy easing from the Riksbank.
Because the unemployment situation is also getting worse, isn't it? I saw it's ticked up to about 7.4%, which for a country which is seen as to have a relatively bullish economy, it's still pretty high. Yes,
that's right. We are seeing some rises in the unemployment rate, and a recent Riksbank survey has also been talking about the worries that the reduction in demand that we're seeing from abroad, notably from the Eurozone, is likely to have an impact on the hiring plans of Swedish companies as well, particularly in the manufacturing sector. So I think this is likely to be an area where the doves on the Riksbank will continue to advocate easier monetary policy.
Yep, so Sweden, also we can't separate Sweden from the Eurozone problem, can we? Although it's obviously not part of the common currency, 70% of its trade does go to the Eurozone.
Yes, that's right. So I think, given the fact that it is closely tied to the Eurozone, if we are seeing a continued slowdown and continued problems within the Eurozone, Sweden will be affected.
Do you see much more upside potential to the Swedish krona? Because some analysts have been looking at the value in the 80s and 90s and saying it still has a lot further to go.
If you look at it on a trade-weighted basis, it is around its 20-year average. So it is relatively high at this stage, which has been having a dampening impact on inflation and is likely to have an impact on the economic outlook as well. In terms of near term, we do look for some downside for the Swedish krona. We think that the risk reward does favour the Riksbank cutting interest rates tomorrow by 25 basis points. There is also a risk that they will do a follow-up cut in December, which means that rate spreads will tend to move against the stocky in the near term. So Euro stocky we think may well go up to around the 8.7 level, and then probably next year we'll be heading a bit lower as Eurozone problems start to come back into the fore.
Whenever I speak to currency strategists like yourself, I always have to ask a token Eurozone question. So what do you expect in terms of the Eurozone situation? Do you expect the euro to keep grinding lower until we see a solution involving Spain?
We actually see some continued near-term upside for the euro, largely on the view that some near-term tail risks have been soothed by the ECB action. Greece has reportedly been given a 2-year extension to reduce its deficit to the target level, and we are seeing, we do think that Spain will be formally requesting a bailout by the end of this month, and hopefully then signing an agreement for the bailout in mid-November. So that should be a fresh kicker for the euro in the near term. But I think gains are starting to be exhausted, and I think once we head into the year end and into 2013, then there's a real risk that fiscal problems start to come back to the fore. We do see the risk that programme countries start missing their deficit targets, and growth really does start to stay weak.
Well, some real quality insight there from the officers of RBS. Stay tuned to Dukes Copy TV for more news and analysis, but for now, goodbye.